Everyone, so today's topic is the difference between a mitigation block and a breaker block. Now what I'm going to show you in this video, I'll say it's a secret actually, which many of you know but are subconscious that you don't know it, but you know it. Let me use that word. Now we all know that I'm going to use a bullish momentum, that is for the buy, a bullish momentum. So we all know that market moves like this: higher high, higher low, higher high, higher low, higher high, higher low. I hope that is better. Or I can use this one, I can use that: higher high, higher low, higher high, higher low, higher high, higher low. This is the way a bullish momentum moves, if we all know that, right? Let me delete this one. While for a bearish momentum, for those that use the chart analyze, we know it's going on a down momentum. That will be lower low, lower high, lower low, lower high, lower low. Now, how do we know a mitigation block and how do we know a breaker block? Now, when market does, for a bullish momentum, when market does higher high, higher low, higher high, it mitigates an order block or a fair value gap here, higher low. It goes about and break the higher high here. It breaks it. That is for the normal trend for a bullish momentum, right? It fills the order block, it breaks the higher high, and it moves up. But for a mitigation block, this mitigation block, what market does is market comes down here. You can touch a fair value gap or a breaker block, but market do not break the higher high. You can see this here. Market comes down and break the higher low. Do you see that here? And also sometimes they do break the breaker block, sorry, the other lower low here, or this one, it breaks it, come back here, mitigate it, and change direction of the trend. I'm going to make it very easy for you to understand. Now this is a break, this is a BOS, am I correct? Yes, this is also a BOS here, right? Higher high. And this is what? A BOS. Market should have broken structure here. You can see that, right? But there was no any form of break of structure above here. If you can see it very well, there was no any form of break of structure above here. Can you see it? There was no, this zone did not break, this higher high did not come out here, did not break this previous higher high. What market now did is market now came what and shifted structure. It shifted structure. That's a change of character. Some people call it shift in market structure. And what did it do? We mark this whole zone, this particular order block that did not break the higher high, we mark it as our mitigation block. Do you understand? We mark that as our mitigation block. Vice versa, if you are doing for a bearish momentum, the same method works for a bearish momentum. Now, how do you know a breaker block and how do you trade a breaker block? Like I said, it's something that you know, right? But you feel like you're not getting it, but you know it, because this is what I struggled with myself and it took me time to understand how it works. Now we know how market goes: higher high, higher low, higher high, higher low, higher high, higher low, right? And higher high again. But now markets, for a breaker block, now market is breaking the higher high. You know, for a mitigation block, market did not break the higher high, market stopped halfway. Do you get? But for a breaker block, market is breaking the higher high, market now goes and break the higher low and comes back and retests it and continues direction. Now, how do you trade a breaker block? You trade a breaker block through the use of your Fibonacci. You take your Fibonacci and you take it from the higher high to the higher low. Normally this is your breaker block, right? You've marked this whole zone as your breaker block. But the beautiful thing about it is that as long as market has not gotten to 50% of your Fibonacci, that means you want to buy market low and you want to sell high. You have to sell it in case you have an orange that you see an orange for a sale for 20 naira. You want it for markets to get down to 20 naira so that you can buy it, so that in the future you can sell it for 100 naira. So you have to wait for market. You'll be looking for either a fair value gap, the different type: inversion fair value gap, the volume fair value gap, the implied fair value gap, or a normal fair value gap around here. You'll be looking for the institutional reference points around here to be able to trade it. You won't just enter immediately when you see a fair value gap. It has to be in the premium, that'll be in the premium zone in case it's shifting trend to a bearish momentum. Now I'm going to show you an example in the chart. Now if you can see here, now I deal more with swing structure. Now if you can see here now, if you are looking at the swing structure of this market, right, the swing of this market, you realize that there was a shift, a bigger shift in market structure here, right? And also there's also what, a shift, a break of structure inside here. I pick this zone as a shift in market structure. Let me delete so you don't get confused, because of there was a break of structure here and market shifted up here. That's why I put in the line there. But if you look inside here, we also have what, we also have a break of structure inside here. We also have a break of structure inside here. You can take it as a mitigation block also, because you can see it came out with a wick. But not to confuse you, you have to practice it on your own to be able to understand it. Now if you see very well here, there was what, there was a shift in market structure here. There was a shift in market structure here, right? Now if you can see, there was a break of structure, market going up, but market did not what, market did not break this upper high here. You can see that, right? Well, this is for a big you can refine it to your entry, but let me find something very small. I want something very, very small so you can understand it very well. Okay. You have to play with this thing very, very, very well to be able to differentiate a mitigation block and a breaker block. That way you'll be able to know how to analyze your chart very, very well and able to get a good entry. Example for a breaker block, you can see now there was a shift in market structure. If you had watched my video on swing points, that's swing low and swing high, you will know when you see a swing point and a shift in market structure. Now normally you would have picked here as your breaker block, right? But this is not a valid breaker block, because you will be buying so high. If I take my Fibonacci from the low to the high, this is where the market broke structure with body here. So I'll take it from the high to the low. You can see it, right? If you are buying directly, if market breaks structure here, you are buying directly. This is waste of, you're wasting money. You have to look for an institutional reference point. I like fair value gap, so bear with me. There's a fair value gap here, and you can see market got here. And if you can check it on a higher time frame, on 4 hours or 8 hours, well, depends on you actually how you analyze your charts. You can see that market hit there and pulled up. I'm looking for a mitigation block for you so you can understand it very well. That is for a breaker block. But for a mitigation block does not require a break of structure. It always happens a lot when you are trying to refine your charts, either in the 5 minutes. Okay, I found one. Now there's a break of structure here. Market came down here, pulled up, it came out with a wick. You can see here, you know, normally if market break out with a body, it is a valid break of structure, but this is an invalid break of structure. This is a mitigation block. Like I said, the more you practice, the more you get to know the difference between a mitigation block and a breaker block. This is a break of structure here. Market came in here, came out, but it did not come out with a body. You can see it did not come out with a body, but it came out with a wick. So it's an invalid break of structure. It came and shifted structure. You can see the structure being shifted here. This other block entirely is a mitigation block. Not to confuse you, I'll use a box. This last candle, because it's a swing point, is your mitigation block. So I hope this video can make an impact in your trading. You can go around the charts and try to locate mitigation block and breaker block. Feel free to email me or send me a WhatsApp message. I always try my best to reply everyone one by one, as much as I can try to reply all my chats. Don't forget to subscribe on my channel, and I hope you are gaining value for your time. And Charles, thank you.